Today we're looking at the Forex pair Euro Australian dollar and the cryptocurrency Monero. Stay right where you are. Hi, this is Tim from TradingStrategyGuides.com. Welcome back to our channel. Today we're going to look at a bear flag on the Euro Australian dollar Forex currency pair and a descending triangle on the cryptocurrency Monero, otherwise known as XMRUSD. But first, we've got a couple of active trades to check out, and later on, a brand new Trading Maxim. Happy Monday, everyone. Today is a bank holiday in the U.S., so I don't plan on entering any trades today. Plus, until September, I'll only be risking a maximum of 0.5% on each trade. Summer is a time of low volume, so it has a tendency to be whippy, so I'm going to keep my risk low. Let's catch up on the active trades. We've only got two today. Microsoft Corp is still flying with this huge move right here on Friday. This candle is really bullish because it's big and wide and it closed right near the top. But there could be a retracement. Typically, we look for 50%-ish retracement before it moves further. Currently, my trailing stop is 267.71. locking in $5.50 per share, which is higher than our original target right here. Go Microsoft. The cryptocurrency Dash popped up right here and hit the trailing stop at 143.2666 for a profit of about $8.92 per coin on the second half. Done with Dash for now, and that's all the active trades for today. Let's take a look at today's trade picks. Our first setup today is a bear flag on the Euro Australian dollar currency pair. Just to be sure everyone understands, a bear flag consists of an incoming downtrend like this one right here, and then an ascending parallel price channel like this. A bear flag is a bearish consolidation, so I will only take a sell trigger on this, and the pattern is confirmed by a decline in volume and volatility, which is a great indication of trader boredom. I measure the volatility using the average true range, or ATR. And here's the trade plan. We'll sell a daily candle close below the bear flag. On the breaking candle, to enter a full-size position, we want this volume bar to reach up here to the volume average. If it doesn't reach the average, but does reach at least 75% of the average, I'll open a half-size position to reduce risk. You can calculate that percentage by taking this volume number, dividing it by this volume average, and you should get 0.75. If you don't get at least 0.75, I suggest you stand aside on the trade. Stop loss is 1.5 times the ATR. First target is 1 ATR. So what does that mean? That means when this thing breaks down here and the candle is about to close below this bear flag, prepare your sell order wherever the close is. Look down here at the ATR, multiply that by 1.5 and measure that distance above your entry for your stop loss. Measure 1 ATR below the entry for your first target. If after entering the trade we get a candle close back inside the bear flag, we'll take the loss right then and not wait for it to hit the stop loss. A breakout of the pattern should be explosive and hit our target fairly quickly. If not, and the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. I am only going to risk about 0.5% of my account on each trade until September. That's today's setup on the Euro Australian dollar currency pair. Our second setup is a descending triangle on the cryptocurrency Monero that has a symbol of XMRUSD. A descending triangle consists of a strong support level like this one here at 176 with several historical touches or approaches of the line and a series of lower highs as fewer and fewer traders are thinking about taking this long. Each time the price gets back down to the support level, it chips away at buy orders until it finally breaks through. It should break out of the pattern with strong momentum. The descending triangle is a bearish pattern, and I will only take a sell signal on it. And a good consolidation pattern, like I said, should be accompanied by a decline in volume and volatility. As I said, I measure the volatility with the ATR. Here's the trade plan. We will sell a daily candle close below the triangle or below this 176 level. I'm not going to bore you with the whole trade management spiel again. Those details are the same on all my trades. If there is at least average volume, enter a full-size position. If there's only 75% average volume, enter a half-size position. Otherwise, stand aside. Stop loss is 1.5 times the ATR. The first target is 1 ATR. If you get a candle close back in the triangle after you enter the position, close the position and take the loss. Get half off for profit when it hits the first target and move the stop to break even on the remainder. Again, I will only risk 0.5% on this trade. That's today's setup on Monero. Okay guys, that's how I manage these trades. You do you, okay? Make sure you don't take any trades until you understand what you're doing and until you are comfortable with the setup. And of course, the other side of trading is the psychological side, and to keep a handle on that, I use my trading maxims. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. You guys know the deal. Use whatever tools you need to help you maintain discipline, because discipline and consistency in everything is paramount. And today, a brand new maxim. Tim's Trading Maxim number 89. It's not the will to win that matters. Everybody's got that. It's the will to prepare to win that matters. And that's a quote from Paul Bryant. You may know Paul Bryant better by his nickname, Bear Bryant. He's best known as head coach of the University of Alabama Crimson Tide football team. And if you've been around here for a bit, you might know that I'm a huge fan of the Clemson Tigers football team, having spent quite a bit of my young life in that institution. So, why, you may ask, am I quoting from an Alabama coach? Well, as hard as it is to admit it, he's right. Just having the desire to win is insufficient. You have to have the will to prepare to win. That's the tough part of the equation. The winning is the fun part. The drudgery comes during the planning and extensive training and practice you must go through to win. So, how does that apply to trading? Well, it's the stuff I've been sharing in the Wednesday and Friday videos for the last few weeks. The trade planning, the journaling, the trading psychology, that's the stuff you have to go through to be a successful trader. If you're not willing to go through that, you need to stop wasting your time. Sorry for the tough love, but somebody had to tell you that. Remember our Euro-Australian dollar trade plan for today. We're going to sell a daily candle close below the bear flag. Our Monero trade plan for today, we're going to sell a daily candle close below the triangle or below the 176 level. For both trades, take a full-size position if you've got average volume or better, half size if you've got 75% average volume or better. Your stop loss is 1.5 times the ATR, and your first target is 1 ATR. And that's all for today's video. Come back Wednesday, Friday, and next Monday for additional videos. They come out about 3 p.m. New York time, barring unforeseen circumstances. And my apologies, because we've had some trouble getting them out on schedule for the last few times. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, click the like below, subscribe, hit the bell if you want to be notified of our videos in the future. Have a great week, and I'll see you Wednesday.